All right, hello folks. Tim Davis coming to you guys with another market review before the beginning of a new week. Today it's now Sunday night on May 21st, 2023. It's about 11:40 p.m. Going to start off this weekend by taking a look at the VIX. So here is a look at the VIX. This is the daily chart of the VIX. Just going to point out something here. So the VIX has trended down from March until we got right around this $15 level, as you can see here. Got around this $15 level, and then something started to happen with the VIX. Started to see some movement. Oscillated back up to around 22, then came right back down toward around this 20 per moving average. Sorry, it's 20 per moving average line. And right back up to around 1830, 1850, and right back down towards that $15 level, but it did not break below that low of 1553. So we made it like a little higher low. So it looks like the VIX is settled around this area here. VIX is settled around this area. Okay, I wanted to point that out. So it looks like the VIX has found a new level of support right around this level here. Like it wants to go higher. I wanted to make sure I reiterated the fact that the VIX is still very, very low, folks. Well below 20, well below 25. And for something to make you think, to put your thinking caps on. I've never seen a bull market start with a VIX this low. So I wanted to put that out there for food for thought. So no matter what happens on this week with the debt ceiling, we may get a little pop in the market. Anything is possible. But the VIX is still extremely low. And we hardly ever, I've never seen a bull market start with a low VIX. Normally bull markets start, extremely bull markets start with a higher VIX. So that's just food for thought. So we had an extreme low right around this $15 level. We got a nice bounce on the VIX on Friday. So we had to see where we go from here, right around a support level. I drew these couple of trend lines in here for short-term levels of support and resistance that we need to pay attention to. This lower level here is right around this 1587 level. This mid level is around about 1830, 1835, and this upper level is around 21, about 2130. So if we break above this 2130, then we're off to the races for the VIX, and it means it'd be a negative for overall markets. 1850, if we get back above that level, we're going to break out of a recent range that the VIX has been in. So the VIX has been below this 1838 level pretty much since around May the 8th. So May the 8th, we've been below this level for a couple of weeks. And since around March, since March the 27th, the VIX has been unable to break and hold a level above that above this level here, above this 2130 level. So for several months, we've been below that 2130 level of the VIX and been unable to break back above that level. So it leads me to believe that eventually that level could be broken. The 2130 level could be broken in hell. We have to see what happens over the next coming days and weeks or so. But for a couple months now, the VIX has been below this 2130 level. And again, that is pretty much unusual for the site of a new bull market. All right, that's the VIX. We add a level of support. We could start to see the VIX creep back up. Let's look at the VIX. Let's take a look at the S&P 500. Before we do that, let's look at the SPXA 200R. So this is a momentum tool, an indicator tool that I like to pay attention to, which is a good indication of the overall momentum of the market or the direction the market wants to go. Again, the highest this level can get percentage is up to 100%. That means the percentage of stocks that are trading above the 200-day moving average. Anytime we get below 50 in a bear market on the way down, that is not positive for our markets, folks. That's negative. So I wanted to point that out first. Right now, we have around 48% of S&P 500 companies that are still trading above the 200-day moving average. That means that we got more companies that are trading below it than above it. And we're right at looks like a possible pivot point with the percentage right back up to its 50-period moving average, with the oscillators and the Williams percentage starting to point downward. There's in the CCI, there's a huge distance between the two oscillating lines, which we call the K and the D. Huge space between there. Normally that is a sign of a possible reversal in other direction. So I wanted to point that out, that the overall sentiment of the market is still negative by looking at this tool. All right. Now let's switch to the S&P 500 daily chart. All right, here's the S&P 500 daily chart. Folks, I've been squawking about this $4,200 level for quite a bit on the S&P. Looks like we finally reached it just a bit, but look what happened once the price action reached that $4,200 level. That $4,200 level has been a major wall. It's like a major ceiling that's been a headache for the S&P 500, as you can see, as we just look back all the way back to the beginning of the year. It's been a headache for the overall market, and we finally found a way to breach it, but breached it just a bit, and we got immediate reversal, folks. So in order for the bulls to really take this market by the horns, that's not what the bulls want to see. They want to see a breach, and they want to see a retest and a hold and a move higher. Okay, could that be possible? Anything is possible, but is it likely? I don't know. We're still in a bear market, so I don't think it is a big likelihood that we will remain above this level much longer. We have to see what happens. Look at the Williams percentage starting to hinge lower already after breaching overbought territory. It's already starting to hinge lower. Look at the CCI, big time indication, well above overbought territory, with a large gap between the K and the D lines of the CCI, oscillating lines, and well above overbought territory. So that is also a negative sign that we could be coming out of this overbought territory and starting to head lower. Okay, so we bounced above $4,200 level, and we came back below it before the close of business on Friday. That's not a positive, that's a negative, but we have to see what happens. We still got price action above the 20 per moving average. So we have to see if we do get a pullback, do we hold there and bounce? So we have to see. There's a huge possibility that we can get to this level and break right through it and start to head back down towards some of these other levels that we are watching. That's the S&P. All right, let's take a look at the Dow Jones. Here's our Dow Jones. Again, still a lot of negativity showing, folks. Dow Jones 2, right below its 20-period moving average and at a key level of resistance right at that 20-period moving average, with the oscillators and the Williams percentage already hinging lower. Okay, we do have some overhead resistance right around that $3,400 level. We have not been able to break above this 20-period moving average. So will we finally break above it? We have to see. Right now, all the indications is that, especially if we paid attention to the VIX, how low it is, indications that we could start to fail here. So we have to see what happens as we go through this upcoming week. Let's take a look at the NASDAQ. Out of all the these indices, I think the NASDAQ is the most overbought. It's the most overbought, and it's been overbought for quite a bit. And look at this price action alone, folks. How it's just rallying straight up, and it's creating a big time space between the 20-period moving average and price action. Folks, you've been watching me for a while. I told you that it's not positive for the markets. It's normally negative when you have that big gap between the moving average and price action. Normally, when you see such a big gap, normally there's a sign of a reversal to come. If I was to look back at some recent previous history, you can see that before in the past when we had a big gap up away from away from the moving average, back here around the beginning of January, look at that big gap. Look at that big space between here. Big gap up. And then what happened? Started to trend lower. Started to trend lower. So could we see the same type of action here? That is very possible. We could be at a pivot point. And if you look at the oscillators, they also show overbought territory, extremely overbought. From full stochastic is showing that. The wins percentage also showing that with a possible crossover oscillator below the overbought territory. CCI also show overbought with a hinge in the oscillator starting to turn downward. The K&D line is getting closer together, which signals a possible cross is imminent. So be very, very careful if you have if you're really looking for a continuation of the NASDAQ to the upside and you hold the positions within that index. Be very, very careful. All right, that is the NASDAQ. All right, let's take a look at the Russell. Big reversal candle on the Russell. And I told you guys this has been the weakest one of all. So you got a big reversal candle on Friday with the Russell at that move above its 20-period moving average. We're about to break back below it. That's a huge possibility. Look at the oscillators and win percentage. Big rejection back below the overbought territory. Big rejection down. Full stochastic looks like it's about to cross with a sell signal, like the green line is about to cross below the red line. Big divergence between the K&D and the CCI. So that could be ready to turn negative as well. Folks, pay close attention to this Russell because it's like I said before, Russell's at a level of resistance, like it's about to try to pull back. If the Russell has a harsh move lower, it could be very, very detrimental to the rest of the markets. Pay close attention to the $1,700 level on the Russell. That's a very negative hit. The biggest one is right down here around the 1650 level I was telling you guys about for a while. If we break below this level, I think that's 1650. Let's see. If we break below this level here, right around 1650, I would say 1655. That is the high of 2020. That's going to be extremely negative for the overall market. So pay close attention to this reversal in the Russell. If this reversal stands firm and it cannot break and hold above this $1,800 level, that's going to be extremely negative for the overall markets. Also, folks, keep an eye on Bitcoin because I'm not a trader or move up Bitcoin, but it's been trending lower and normally as it's been over the past year or so, when Bitcoin starts to break back down, normally markets tend to end up doing the same. Here's a weekly chart of Bitcoin, and what I want to point out here is what it's showing us. Look at the oscillators. This is a weekly chart. Look at the oscillators in wins percentage. It's pointing straight down. Strictly, that's a huge bearish move. Oscillators in full stochastic is pointing down. Oscillators in CCI pointing down. Is that what we're about to start to see in the overall markets? That's a huge possibility. Because normally they start, when Bitcoin starts to falter, as has been in recency, Normally we start to see some type of reversal in overall markets as well. So let's see how that pans out. Let's see how that pans out. Take a look at the S&P one more time. Get rid of these markings. And I wanted to point it out. So if we look around here, this is right just beyond October of 2021. The market started to pull back. So October 2021, market started to pull back. And if I switch back to Bitcoin, SBTC, almost the same time, right around October 2021, Bitcoin started to pull back in a major way. All the way down until where? October of 2022, when Bitcoin started to reverse back to the upside. And what else did the same? SPX. Reversal all the way down to ultimate low around October 2022. The same time Bitcoin decided to bottom. So I wanted to point that out so you guys the correlation to the two. All right, folks, that's all I have for you guys. Enjoy the rest of your day. Hopefully this is information that you can use. And again, be very, very mindful of how low the VIX is as major indices are showing overbought territory. All right, folks, catch you guys on the next video.